In this video, I look back on a Forex trading strategy which I created in front of you guys here on YouTube. The strategy has a very simple entry and exit technique, and it uses ideas which I borrowed from Larry Connors and Larry Williams. If you haven't seen the original video, I will link the original video so that you can have a look and see the development process which I went through to create the final strategy. But the reason I'm looking back on that strategy today is because it's been almost 18 months since I developed that strategy, almost 18 months since I published the video on YouTube. And I want to look back and show you the performance of it since then. And in short, the performance has been very good. So in this video, I'm going to show you that report, which includes over 40 trades and, like I said, almost 18 months since I first developed that strategy. I'm not going to go into a massive amount of detail how the strategy works in this video, but if after you've seen the video and you like the performance, perhaps you want to trade it, then do go back and have a look at that earlier video. And even for that earlier video, I did create a free PDF which outlines all the rules, so you can still get that for free. I'll leave that in the links down below, and it'll also be linked down below in the older video. I'll first show you the results from the exact strategy from the first video, and then I'll talk about that little modification I made to trade the strategy live. As I've got the charts open, let's have a look at a couple of trade examples. We're looking at the daily chart, or 1440 minute chart, of Euro-Pound Forex pair. And all we're taking note of at the moment is the closing prices of each day. And we enter a long trade if the closing price is the lowest closing price over the past 14 bars. So we look at the close, we look back over 14 bars. If it's the lowest one, that's our entry trigger. And you can see we've entered on the open of the next bar, which is only a few minutes later because it's Forex 24-hour markets. Unless this happened on a Friday, and then we would wait until the open on the Sunday. The exit is just as simple. It's the bailout exit, or Larry Williams' first profitable close, which means once we're in the trade, we look at the close. If we're in profit at the close, then we exit the trade, and we're just exiting on the open of the next bar. So you can see this didn't last very long, this trade, for a profit. Then this close here was lower than this close and this close, and over the past 14 bars, so that was another entry trigger. So we got in there. The next day we closed in profit, so we exited. Let's have a look at a short trade example. This one here, for example, this close here was the highest close over the last 14 bars, so we entered short. And at the end of the day, we closed out in profit, so we exited on the open of the next bar. We did come up with an extra rule, which was a volatility filter. We said we want to look at the ATR, or the average true range, of the daily chart, and we only want to trade if the average true range is less than 120 pips. And what that does is that keeps us out of the market in crazy volatile times. And the last thing, we've just got a simple 250 pip stop loss. Those of you who did watch the older video will remember that I did an optimization on the look back period, and we came up with the idea of using a 14-day look back, and that's what we'll be looking at today. So let's have a look at some of the results. On this chart here, we've got data which was equivalent to what we had in the first video from 2008 up until 19th of March 2021, and you can see the last bar is 19th of March. So there's what the equity curve looks like. You'll remember that from the previous video if you've already seen it. We got that high percent profitable, 407 trades. Largest losing trade, that's our stop loss of 250 pips. So let's apply some more data, and I've got that on another chart here. This chart here, we can see we've got data right up to the 19th of August 2022, which is as much data as I've got at the moment. And that is the full data set from 2008. So it's got that extra sort of 15 months added on. Obviously we've got more trades. Percent profitable is still good. The average trade has actually gone up a little bit. And there's the equity curve, and if I look for March 2021, which is about here, so Everything to the right hand side is that extra 14, 15 months worth of data, which is completely out of sample. Next, I'm going to show you the results of the strategy from the day in which I created the strategy until now. And then I want to talk about the minor modification I made so that I could trade it more effectively live. But before we do that, if you like rule-based trading strategies and you're looking for more time-tested strategies, then you might well be interested in my popular trading course. Not only do I demonstrate the best way to trade rule-based strategies, including things like position sizing, strategy monitoring, but I actually give away the rules and actually the code to 6 more trading strategies. As usual, all the links for that will be in the description down below. I watched the strategy a few months after I created it, and as you can see, it has been performing quite well, good enough to trade live. So I created a modified code, which is ever so simple. All it does, instead of when we get the signal, instead of entering the market on the open of the next bar, what it does, it actually delays that entry for about 90 minutes. And what this does is it avoids some larger spreads around about the opening time of the Forex markets. So now, rather than getting in or out the trades at around about 1700, I get in or out the trades at about 1830, which is Eastern Standard Time. So 90 minutes after the open. So let me show you on the charts. So I've created it using a 5-minute chart. I've actually got on a data 2 set down here, the 1440 or the daily chart, which I use for the signals, but I execute trades now on the 5-minute chart because it allows me to execute trades at whatever time I like within 5-minute intervals. Now on this chart, I've got data from when I developed the strategy first, so that's the March 2021, right up until the present day, which is late August 2022. Looking at the equity curve, that's really quite nice, isn't it? Performance summary makes £9,000. So we've got 41 trades. The percent profitable for just this totally out of sample period is over 95%. And that's pretty incredible, isn't it? So many times I hear people bashing high percentage or high win rate strategies, and that's probably because there is a lot of rubbish out there. But this is a genuine strategy, genuine 15 months worth of data, and out of the 41 trades we've only had 2 losing trades. Sure, with a high win rate strategy your average winner is going to be smaller than your average loser, but nonetheless they do have a high win rate. So the average trade value for this 15-month period has gone right up. It's almost doubled compared to over the whole data set. The largest losing trade is actually much smaller. That's only 83 pips, whereas before it was 250 pips, which is our stop loss. And if we look at the equity curve close to close, this is after each trade is closed out, we can see this trade here was obviously a losing trade. This trade here was a losing trade. Every other trade was actually a winning trade. And the last thing I want to do is just to add some trading costs in, because I haven't actually added any trading costs in yet. In the original video, I actually added in 2 pips worth of trading costs. So let's have a look at how the performance changes when we add in the trading costs. Before I added in 2 pips, which is £10 in, £10 out. Actually, let's add in a bit more. Let's add in 4 pips. So that's 20 in and 20 out. Looking at the performance report, the equity curve has hardly changed, which is great news. We are making less net profit, obviously, and the average trade value would have gone down. It's now gone down about £40 to £183. Still a very strong average trade. The percent profitable has gone down slightly too, and that's because whereas before we might have been getting out of the trades with very little profit on paper, now we've added in the costs. It's probably turned those very small winners into small losers, so that's why the percent profitable has gone down. Obviously, we still haven't hit the stop loss in the strategy, so the largest losing trade is still about 86 pips. It's always nice to see positive results like this, but as I always say, when you've developed a strategy, keep a watch on them for a few months before trading live. Algo trader Kevin Davey, he calls this period an incubation period, a chance to monitor true live performance before actually applying real money to the strategy. Today's strategy has shown great results, passing that incubation period well over a year ago. But not all of my strategies show positive results immediately after the development process. And those strategies simply don't make it past or don't make it through that incubation period. How much longer will this strategy keep performing? I don't know. That's why it's so important to monitor each individual strategy to try to recognise if and when the strategy stops performing and actually loses its edge. So I hope you found this video useful. I hope you can get some use out of the strategy. If you've been using the strategy since the first video, let me know down in the comments. But if you didn't get to see this strategy or see the video first time round, well, now you have. Hopefully you get some use out of it, maybe improve it even further. Let me know if you do. Well, that's all for today, but I will see you next time. Until then, this is Jared Goodwin, and thank you.